All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 15th, 2024. So I just finished up the small group coaching with Cohort 1 session today. And George made the point, he said, what's making a difference for him is that today he was surprised by the large gap up, but he knew exactly what he wanted to do and he just did it and executed standard work for abnormal times, and that makes him different than 99.5% of the human population right now, who gets surprised and freeze or panic react in one direction or the other. And that makes all the difference to have standard work for abnormal times is a persistent edge in every market, every business situation too, I would say. All right. So let's start with the 30-minute charts, the hybrid swing portfolio. And today was a day when, if you're following the basic strategy, was your easiest day of the year to get a directional trade on the short side after this large gap up. So let's see how that unfolds on our symbols of choice. Alcoa closed here. Now, notice the importance of getting to closure each day. We had a double position on Friday and closed it out here for a very nice trade, 7 or 8R. If you get greedy and hold that, you get smoked with this adverse gap, which would have taken an 8R trade and made it a minus 5R trade. But because we're starting the day neutral, it moves in our favor, it moves up, comes back. Now the whole market is starting to sell off here. So the first trade on the long side scratches, and then we stop and reverse when it comes back to the VWAP, put our standard risk on. It sells off to here, it comes back to the VWAP, so I exit according to rule, and we make 0.5. I'm very proud of that 0.5. Now, I don't take the re-entry here because there were so many other easier targets to see, but this little 0.5R win, this gap and go, and then the reversal for a 0.5R, I'm very proud of that piece of work. AI, now this one was easier because this was here's the downtrend of the last 5 days. Clear. Here was Friday's sell-off and cash. Here was the gap down below the belly of the RL10. That's a collapsing dragon all day. So we put a standard risk on. It drops like a stone. And at this point, we are holding 1, 2, 3R in hand. So we add the second position, and all that does is continue to sell off. And then at the close of the day, I'm holding 3R plus 4, 5, and 6. This is 6R on the first position, 3R on the second position, 9R, no overnight risk, and this thing is in play tomorrow. I just don't know which way it's going to go. I don't know if there's going to be a gap or not. But no matter which way it gaps and which way it goes, I know that it's in play. The default position is to the downside because the market just started to smell panic today. So tomorrow was going to be quite a day. Now here's Caterpillar. Same story. Cashed the intraday trade Friday, rested comfortably overnight, gapped up to here, sold off, get short when it crosses below the VWAP, short, standard risk, standard exit, 1, 2, 3, 4. No overnight risk. Cliff, same trade, 2R. CVS, no trade. Diamonds, gap and roll over, 5R, standard trade. Disney, no trade, had better choices. Devon Energy, 4R on the weakness in energy after the gap and drop. Emerging markets had better choices in the afternoon, no trade. Ethereum, can't go short that one, but if you're trading the currency directly, you had a continuation trade to the downside, which was nice. Mexico, I tried the gap down and short, scratch, re-entry for 2. EWW picked up 1 on a continuation to the downside. Home Depot, the short was there. I just had better choices. IP, 1R on the standard short. Real estate, 4R, standard short, collapsing dragon, right by the numbers. Coke, 2R on the Kata 2. Real estate, no trade, had better choices. McDonald's, no trade, better choices. 3M, 2R on the collapsing rollover there when it crossed below the VWAP. 2R. Merck, no trade, better choices. Microsoft, this would be one of the better choices. And this is not even all that optimized. We had a nice gap up, sold off and recovered, sold off again. When it finally broke below the edge of the dragon and the R10 and broke the PSAR, I got short with standard risk. And even that late in the day, it still returned 6, 7, 8R. And there was an opportunity for a second position here or here when it broke below the anchored VWAP, which was also a collapsing dragon. I ran out of capital on this one. So 8R on a straightforward play, no overnight risk. Marijuana, no trade. Nike, no trade. Clean energy, NVIDIA, no trade. That one was straightforward. I just had better choices. Target rich environment. Clean energy, collapsing dragon, 2R entry, 6R exit. Palantir, Kata 2 rollover, 3R. Rivian, collapsing dragon, 3R. Notice it's all of the speculative growth ones that are like meme stocks, people cutting and running. SOUN, 3R, collapsing dragon. S&P. Now, this is a move from 515 to 505. That's 1,000 points. And at $10 a point on one contract in the futures, that's 10K on one E-mini. You don't have to get all of that. You could wait, and we talked through this on the coaching drill. When it broke this double bottom, your entry here or at the PSAR flip, you still get $5, which is 500 points. That's a $2,500 move on a single contract. Straightforward, never looked back. Tesla, standard short 3. Walmart, no trade, better choices. US Steel, no trade, better choices. XLI, this was one of the better choices. You have the industrial sector collapsing through the VWAP, through the 5-period anchored VWAP. So short, standard risk, collapses down through the PSAR for a second position short. That was at 4R in hand, 5, 6, 7. So the first position gets 7, the second position gets 3. That's 10R, no overnight risk. Lather, rinse, and repeat. The Cohort 2 small group coaching is going to start this weekend. I know the guys are waiting on me to get it started. I want to give you one last chance to get on board that before I close the door on that one. You got till this weekend to sign up for that. I am willing to take the payment plan. I've set that up for some other guys already. So if that's what you need, just give me a note. We're gonna, once I see who everybody that is there, I'm gonna pick one night a week for the hour check-in. I'm looking at doing Tuesdays from 7 to 8 Central, if that works for you and Damian and Kevin. And so there's 4 or 5 guys in there. I'm looking to do Tuesday night, 7 to 8 Central on Zoom. If that doesn't work, then we'll find a time that's better for you, but that would fit best in my schedule. It's either going to be Tuesday night or Friday night. For an hour for the next year. So that small group coaching comes with 52 weekly sessions of dedicated accountability time and coaching, plus access to what the cohort 1 is doing. So you get an advantage of the insights that we've been generating there, which are pretty considerable. All right, let's go to sniper trade of the day. Just, you can pick any of them, but we'll just go with this one. So this is EWW Mexico on 3 minutes. So here was yesterday's close. Here's today's open. It sells off all the way back down to here. I take it short. There's my standard risk. It doesn't follow through. And the PSAR flips here, so I basically scratch. I re-enter short on the break below the Bollinger Band mean, and we get a fraction after on that little recovery. I take the collapsing dragon again. I get a fraction. Now I get the SSC to the upside for 2R. And remember, this is on a day when the rest of the market is failing miserably. So EWW can move independently of the S&P. It's not a surprise. So you just follow the price. So this is about a 0.5. This is about 0.2. This one is 1.5. So we're just making contact and hitting singles. I get short here when it crosses the Bollinger Band mean and it's testing the VWAP. Collapsing dragon, second position, and standard exit. So I was hoping for more, but we settled for 1, 2, 3R on the first one, half an hour on the second one. It's getting to be 2 p.m. One more, why not, for 0.5. The whole market was melting down at this point. So when you add all that up, you get 2, 2.2, 5.2, 5.7, 6.2, just with the standard grinding and nothing unusual to report. Standard risk, standard work. The 30-minute charts, to be honest, were more than sufficient for today once things started to fail. I have some catching up to do from last Friday, so we're going to get some of those as well. This was Tim from last week with Alcoa on the big sell-off on Friday for 2.6. With his collapsing dragon and standard PSAR exit, 2.6. Devon Energy, he brought home 3.9. So he had a 6.5 hour day just using standard work, trying the initial long, then the rollover short, and then the reentry short. They all look the same leaving the station, 3.9 plus 2.6, a 6.5 hour day. This is George learned his lesson about reentry. He put that into practice today. This is from Friday on marijuana. And he made bank on Microsoft on the 10-minute chart for, that looks like 1.4. And that's not even getting the reversal and then the rebound again. So that's a one, and he got one out of the 4 moves and still comes in at 1.4. So you don't have to catch them all. This isn't Pokemon. Kevin brings in, now he risked the cushion of 3 overnight last Friday, and had an adverse gap, which evaporated that, but he was able to bring back some gains intraday to net 0.2, and that was worth the effort. His is trading at 0.5 on treasuries on a miniature swing kind of a move, still positive. Today, George tries short in on the 10-minute chart in MSOS, takes a micro loss, minus 0.2, brings home 2.6 on the Bitcoin, and that's not even catching the reentry, which would have been another 2.5. So we got some work to do on reentry. But we're getting paid with another 0.7 on the collapsing dragon and Home Depot. And again, the reentry is there. So this could have been a 6 or 7 hour day, but still a comfortable set of techniques, and gets paid on Alcoa. And the reentry. This one is not so much bars as the fact that it crossed the VWAP. The crossing of the VWAP, whenever that occurs, is always a moment of interest. And so is finding support after a sell-off at a rising Bollinger Band. So still really good work today with standard work from George on the in abnormal conditions. And we did his weekly review today, and he's fired on all systems. He's at production level and investigating the 10-minute charts and the 5-minute charts, and adding that to his repertoire, making very steady progress 3 months into his annual coaching program. So that's looking pretty good. All right, here's the daily report. We'll catch up on this. Let's see. Page. So now what we had was, today was the first significant selling signal of this entire move, which peaked here, chopped around sideways. Today was decisive down, closing at 504. 500 is an absolutely crucial price level here. It signals here, and it's the psychological support. And if that fails, the next support is at 490, which is another 2% sell-off. So there's 1% sell-off to 500, 2% more gets you to 490. And if 490 fails, look out below all the way back to this support level around 470. So this is there's going to be, all the guys that made money in here are going to want to preserve those profits, and have now joined the selling crew because they want to limit their losses to here. The sell-off from 525 to 505 is minus $20 on 500, and that's a 4% haircut. That's enough to persuade them that they need to be preserving profit from this move, and that makes this simultaneously a buy on dip opportunity for a 4% recovery to the 10-day high, and a preserve capital for another 2-leg move to 490 and then 470. So this makes this a perfect critical state, compound critical state in both directions. So tomorrow is going to be, I think, the most likely range stat kind of day that you're going to see in terms of setups. So we want to be ready for abnormal conditions tomorrow. You can see the size of today's range from the high of the day to the low of the day and how badly it closed at the bottom of that range. And it has broken through the Bollinger Band main, which is now rolled over. We've already got an owl signal short, so that's not catching us by surprise. And then the break below yesterday's low gave us a marvelous intraday opportunity in conditions-based trading. That's all I can say. That's what the breakdown below yesterday's low of the day was. That gives you this enormous downside move in 90 minutes. This is what happens when the collapsing dragon collapses. It's not a choppy move. It is an instantaneous, almost harsh sell-off. And this is collecting up all of the support stops for everybody that was trying to go long here. Everybody that gapped this up and was going put a stop just below yesterday's low. And those were all the stops that were run. And that's what creates that massive downward momentum intraday. So what's that mean for tomorrow? Well, it could be a bunch of guys want to buy the dip and put in a bunch of market on open orders, and that would cause this thing to gap up and temporarily go. Or it could be a bunch of sell orders, and now guys that want to buy inventory could gap this thing down tomorrow. I think there's a good probability of a large gap tomorrow and then large follow-throughs in either direction. That's why Turnaround Tuesday is our favorite day to trade. Have no directional bias. We have a compound critical state tomorrow. Standard work. It'll be boringly good tomorrow. Alarm bells ringing around the world. You got oversold conditions. The strength has come out of the market on the 90-day. Only the 270 remains awesome. The volatility alerts gave us plenty of opportunities, and we got into volatile conditions. Today's move was not surprising. Now, you've got a bunch of buy on dip opportunities for traditional swing traders, which are going to see this as a buy on dip opportunity to push it up back to the 10-day high. And there will be tactical short sellers trying to make this market collapse. When you get exaggerated, enthusiastic traders in both directions, you get increased volume, increased volatility, and that's why tomorrow is going to be an amazing intraday trading opportunity. Like clockwork. And now it's not surprising to see so many of the Dow members firing on the auto framer with lots of 5DDs, with lots of breakdowns in Boeing, Home Depot, and IBM. And the ETFs are showing even more weakness. So these are the ones where you would expect easier money on the downside because they had major drops today, more so than the US. So it's a target-rich environment. Plan your trades accordingly. I'd have some that are ready to go long on a gap up and short on a gap up. I'd have some that are ready to go long on a gap down and short on a gap down. So I want to be prepared for all of those contingencies tomorrow. Standard work. And yeah, winter and fall are now dominating. Only the defensive plays seem to be attractive. I'm ready. The XLI is a marvelous short opportunity. The multi-frame NDX is showing you the prevalence of the weakness everywhere. The only standouts are like American Express and Goldman, who are going to make a lot of money on excessive short-term trading. That's what they're going to do. The frog list for trading value, little change, so the trader opportunities are still there. And this is where on this little one, my note to myself was this breakdown below the river is why I'm classifying this as a downward bias market, because today was the whiff of fear. This could be a reversal, sure, but it's now breaking the bottom of the Z-1. And when it's done that before with the RL10s, you got massive downside follow through both times. So I'll be ready for the critical state trading tomorrow. Fireworks. All right, that's everything we got for today. We'll get this published and posted. Jay, talk with Joe and see how Tuesday nights are for you guys in coaching. I don't mind doing a split cohort if we have to, but yeah, I would prefer one large group for my time. Okay. All right. Take good care, guys, and we will see you ready to trade tomorrow.